Hey, St. John's, this is Gary Davis, realtor with Coldwell Banker Vanguard Realty and creator of this group, Experience St. John's. Welcome back. If this is your first time here, thanks for tuning in. Today's broadcast is going to be a little more off the cuff and a little less scripted than normal. I've got some notes here that I want to share with you guys. It is no secret that our market has changed drastically over the past few months. We went from sort of this booming seller's market, and now things are changing a lot, actually. They started changing really over the summer, and I've kind of given you some play-by-play changes in the market along the way. And so today I wanted to come to you again and kind of give you a rundown of where we are as we sort of finish out the fourth quarter here in St. John's. So the new market that we're in right now is obviously it's driven by higher rates, right? We're also seeing a slow dip in prices. So whereas before home prices were continuing to appreciate, some people have, called for sort of this bubble to burst and, rates are going to bottom out. And really there's just no data to show that that's the way it's going to be. I mean, obviously everyone has their own opinions and no one has a crystal ball, but a lot of economists and people in real estate who know a lot more about, the economy than I do, far above my pay grade, are not calling for that to happen. But we are seeing this slow dip in prices, which is obviously, a result of the really wasn't a hard word, a result of the higher rates, right? The higher rates are going to cause home prices to mortgage prices to go up, so that's going to push the home prices down. We're also seeing fewer homes selling overall. Not surprising, which is leading to also a higher number of days on the market. So homes are sitting on the market longer. That's also leading to more inventory because homes aren't selling as quickly as they were. And the market is shifting over to be in favor of buyers now, other than interest rates, obviously. Kind of everything is shifting over to be in favor of buyers. So, for people who are looking to buy a home, that's great news. But of course, we're still contending with those high interest rates. So, kind of to break now those specific characteristics down and really what they mean for our area. Rates right now are in the upper sixes. They were in the low sevens. We could still creep up there. We could get higher. We might get a little bit lower. I know the Fed earlier in the week lowered the rates. People were very happy about that. But we had low threes at this time last year. So it's in kind of the same prices. Actually, they were a little bit lower this time last year. But certainly it makes a huge difference in mortgage payment, and that's not surprising. Right now, our median sales price, really from this time last year to now, that's why I said, there has been an increase. We're up about $90,000 from where we were this time last year. However, everything kind of started changing in May, when the interest rates went up. That caused those homes to sit on the market and things to sort of stagnate. And that's caused the prices to fall a little bit each month. Sellers, it takes a little while for them to get on board with what's happening. Obviously, they're used to this boom market where they're making tons and tons of money, and it's just not there anymore. I mean, you're still making a really good profit, even if you bought last year. But we are seeing those prices sort of get pushed down, and that's natural just because of rates and what's happening with mortgage payments. I think I did a calculation, and if you were to have bought a $500,000 home last year versus a $500,000 home this year, just that difference in interest was like $1,000 a month. So that's huge. I mean, that really takes a lot of buyers out of the game, and I totally understand why. So where we were last year at this time, we were right around 465 in St. Johns County for median sales price, and now we are up to 553. But of course, that has fallen a little bit each month since right around May and June when things really started to change. Right now, we only have 11% of homes selling over list price, which actually I even find that to be pretty high, but that's what the data shows. And that's compared to 36% last year. So, it's a huge change from this time last year to this time to right now. And that's why strategic pricing is so important, and pricing based on the data, not where you want your home to sell, but what the data is telling you, and not where your realtor thinks it should be, not where you think it should be. It really needs to be very data driven if you're going to price it correctly on the market and have it sell in a reasonable amount of time. We're a little bit lower on the number of homes sold. The same amount of homes have listed. Well, just about. I mean, not a huge difference between last year and this year, but the solds back last year were 530 for October of 2021. And in October 2022, we had right around 450. So about a difference of 80 homes sold, but about the same number listed. So again, we do see some changes there. Days on market has changed drastically. Last year, we were only seeing homes on the market for 21 days. Now we're up to 49 days on the market. Still not incredibly high, historically, but that's still well over double where we were last year. So that's a big deal. And inventory is well over double too. We went from 639 homes in inventory in all of St. Johns County in October of last year, when obviously homes were selling like hotcakes. And now we have over 1,363 homes at the close of business in October. So that's a huge change last year to this year. And obviously it's all driven by interest rates. And that also leads into the absorption rate, which is just the months of inventory. So if we were to stop listing homes at the end of October 2021, we would have had only 1.2 months of inventory left. So stop listing homes, it's going to take 1.2 months to sell off all the homes. And a normal market is somewhere, 4 to 5 months, about 6 months of inventory. That's sort of a balanced market. I shouldn't say normal, but it's balanced. And now we have about 3 months of inventory on the market. So we have definitely more homes to choose from. We just don't have, the interest rates that are going to make buyers want to buy them right now. So aside from rates, everything is kind of favoring buyers and sort of shifting in that direction. I'm going to talk in the next couple of weeks about, some things people can do if they need to get into a home, what they should do as far as, their offer and what they can work out with the seller to sort of combat rates. There's, buying down the rate. There's a 2-1 buy down that a lot of lenders are using. There's all kinds of different loan programs, and, there's more than one way to skin a cat, right? To help people get into homes, because obviously these rates are really what we're all battling right now. All right, so that's what I've got. I hope that is helpful and kind of lets everybody know kind of where we are right now, with the real estate market, because things change so often. I may come back and kind of let you know what's going on next month. I may wait till the beginning of next quarter. I'll probably do a kind of a wrap up next month of kind of where we've been and where we're going. But anyway, so yeah, I hope you found this helpful. Remember, we have a YouTube channel now. You can find us on YouTube, Experience St. John's. There's lots of different real estate videos there, both location specific to St. John's, but also just specific to the market in general and what's going on now in our area. And of course, if you ever need any help, feel free to reach out anytime. You can direct message me here at 904-770-7696. Again, thanks for watching. I hope it was helpful, and I will see you next time. Have a good one.